Alright, good afternoon then folks as we head into US trade on Tuesday the 17th of October. Now we'll just look into the market and see what's going on after retail sales data is dominating the talk between markets at the moment. Now we'll flick across to the charts and have a look at the and have a look at the calendar now in a minute. Oil prices down slightly. Oil falls more than $1 a barrel, and Venezuela deal hopes that a deal will be reached between the Americans and Venezuela to reduce sanctions and increase the supply of oil. Nothing yet to confirm that just as of yet, but oil prices in the balance ahead of Biden Middle East trip. So we need to keep an eye on oil prices and how they react to these geopolitical tensions in obviously the Middle East. US President Joe Biden is heading out there to try and sort the problem out, like he did head to Ukraine when that whole thing kicked off over there. Whether that proves fruitful or whether that results in anything, I mean, Israel say prepare for a long war, so we'll wait to see if there's any escalation, and if there is escalation, do other countries get involved, and does oil have a bit of volatility off it? If oil rises, it's certainly not a good thing for inflation globally. So definitely geopolitical risks and tensions on the table. Are they moving markets at the moment? Not quite. The longer this persists, the more it's going to work its way out of markets. So unless it escalates soon, it will probably become a non-event in terms of markets. Obviously in the humanitarian side of things it's terrible, but if we're just focusing on what it means for markets, the longer it goes on without sort of massive escalation, the less important it becomes for financial markets. But what is important for financial markets today is the retail sales data, and you can see dollar strength across the board. You can see US equity future downside, and really the majority of European equities are also down as well. Commodities relatively mixed, but bond yields globally rallying with those US yields across the board higher. That is positive for the dollar. Well, I say across the board it's positive for the dollar, but yields higher in the US is positive for the dollar, negative for stocks, and that is exactly what you are seeing post retail sales data. Australian dollar up and Kiwi dollar down. Not really going in line with risk sentiment. Too much. Bit of overnight moves off the back of some hawkish minutes from Australia. Mixed currencies across the board. So currencies not really playing ball at the moment, but the US dollar higher, yields higher, stocks lower is what we're focusing on heading into today's session. You can see the S&P then moving lower, the Dow Jones, the Nasdaq, the Russell grinding lower, not really doing too much, but the three major indexes pushing lower, the DAX, the Euro stocks both pushing lower. Now the FTSE up higher after the open today. We'll have a look at why now in a second. You can see these yields though pushed higher post retail sales and now continue higher into this US session, and that is a pretty aggressive move off the back of some positive retail sales data, which has caused some volatility in markets over the last kind of hour or two. Dollar not doing a massive amount, but it's still higher on the day. You can see, the Aussie spiked higher overnight, but has spiked back lower. This hourly candle doesn't look like too much on the hourly, but it is still a solid 30 pip move, which isn't nothing, but isn't a massive amount. Euro dollar, bit of downside, cable, bit of downside, Kiwi, dollar Swiss pushing higher, dollar CAD pretty aggressively higher with that Canadian inflation data as well. Dollar yen pushing lower. Report the Bank of Japan are due to upgrade forecast for the financial year 2023, which will probably drive them into hiking rates to adjusting monetary policy or tightening monetary policy at some point early next year. But it's a little bit of chatter about intervention, but I believe it's off. The back of a reaction to a report on upgraded growth forecasts. But yeah, it's reversed all those moves and now you're back higher. So if it is a bit of intervention, it certainly did not work. We'll come across to the calendar though and we'll have a look. We can see retail sales out of the US consensus for 0.3, actual 0.7. Retail sales excluding automobiles, which is a volatile component of the retail sales figures, 0.2 versus a consensus of 0.2 versus an actual of 0.6. Industrial production consensus was for 0, previous 0, and we're up 0.3%. So strong prints across the board. We look at retail sales. Further followed suit by industrial production at 2:15. These inflation prints out of Canada, which has caused the Canadian dollar to spike lower, dollar CAD to spike higher more aggressively. Weak inflation out of Canada coupled with a bit of a pullback in oil prices, negative for the price of Canadian dollar. So I think selling Canadian dollars going forward, not the worst idea in the world. Long dollar CAD, decent bet, I think, going forward for the rest of the week. Apart from that, not a great deal of economic data out. A couple of speeches later on this week before the Fed entered their blackout period on the 21st of this month, which is Saturday. So once we get into next week, they will be in Fed mode. I say Fed mode, always in Fed mode, but they'll be in the blackout period before their next interest rate decision on Wednesday, not next week, the week after, on the 2nd of November. So retail sales higher, sparking a bit of dollar strength. As long as those yields continue higher, the dollar should continue to be supported, and yields, or stocks should I say, should remain under pressure. So stocks downside, yields upside, dollar upside as we head into the session today. Dollar not doing as much as you may have hoped. I think dollar CAD longs would be the way to play it if you are playing it that way. But keep an eye on a few things. If oil continues lower, dollar CAD's a good bet higher. If yields continue higher, stocks look under pressure as we enter US trade for the day. I believe a little bit of a spike higher in the open on the Dow Jones. Look at that, the Russell's flying at the moment. Do you sell back into those rallies? I think after a higher than anticipated retail sales figure. There's still over 90% chance of no hike in their November meeting in a couple of weeks. Market's not really buying it, but as long as we get US data proving a bit hot, it increases the chances of that happening. But maybe they begin to price in a little bit more. I have to imagine a bit of stock downside maybe over the next few days into next week would make sense, as they don't have to price in an interest rate hike, but not over 90% chance of there not being one. I'm not so sure. So I think stock downside in today's session would be worth keeping an eye on.